Good morning, everyone. Today's topic for the webinar is about the impact of change in the residential status on the various aspects, especially from the FEMA perspective. As you're all aware, there are various types of bank accounts that are being allowed to be operated by a resident and a non-resident. So once there is a change in the residential status, the operational aspects of these bank accounts will also change. And same way, FEMA also prescribes restrictions on who can invest in a property in India, who can invest in a property agricultural land in India. Like this, there are various regulations under FEMA about based on your residential status. Our the core topic for today will be the impact on these impact of these regulations on because of the change in the residential status. This is what we are trying to cover here today. So before starting off, I'd like to thank Akash for his efforts to get this presentation ready. The legends are fairly simple. Most of you should be aware of all these things. We will cover it as and when we reach that point. In the scheme of what we will do is, first we'll cover change in residential status from resident to a non-resident, and then the second part we will cover from non-resident to resident. In all these cases, so we will cover one, what will be the impact of this change on the bank accounts which the individual is operating, and then on the Demat accounts, on the PPF and other investments, okay, and the investments made by resident under LRS and ODI schemes, and any other properties held by him, and loans taken by him in India, and then other simple points, other key points. And same way for change in residential status from non-resident to resident, also we will cover the impact on the change on the bank accounts which is operating, and then on the loan transactions, and on the properties held or purchased outside India by the individual. So starting off, as I said, first we'll cover the impact of change in residential status from a resident to a non-resident. So first one on the impact on the bank accounts. Okay, so the regulations are covered in Schedule 3 to FEMA Deposit Regulations 2016. So in which it is stated that when a person resident in India leaves India for a country, okay, other than Nepal and Bhutan, for taking up employment or for carrying on business or vocation outside India, or for any other purpose indicating his intention to stay outside India for an uncertain period, then all his existing bank accounts in India should be converted into an NRO account. Wherever there is a balance in INR, all this has to be converted into an NRO account, and the balances in his residence foreign currency account or other foreign currency accounts can be credited to the NRE account or FCNR account. So here the important point is, it is only when the resident has an intention to stay abroad for an uncertain period. If you're just going for in a year, maybe now most of the senior citizens go abroad to stay along with the children for 6 or 7 months in a year, but the intention is not to stay there for uncertain period, so they'll be coming back to India. But even if they're staying just only for 6 or 7 months, their residential status could change here in India. But for that reason, there is no need necessary to convert your accounts. But where there is an intention to stay for an uncertain period, in such cases, wherever there is an account, whether you have an SB account or current account with INR balance, all the accounts has to be converted into non-resident ordinary account, and the wherever exchange earners foreign currency account or resident foreign currency accounts are there in India, the balances here has to be credited to the NRE account or the non-resident foreign currency accounts. So this is applicable only when the resident has an intention to stay abroad for an uncertain period. That is when this would be applicable. Otherwise, generally, if they're going for any vacation, they're going to just stay for 6 or 7 months for a certain period, and then they're going to come back. There is no need to change. We can continue with it. So mostly, as well, the people going on deputation or senior citizens going and living along with their children abroad for 6 to 7 months a year. In such cases, they can continue with their accounts here. So this is fairly simple. Just once the intention to stay abroad is for a longer period of time is there, then we need to convert all these things. Next, on the impact on the Demat account. So once there is, so this part is covered in section 6.5 of the FEMA, where it permits NRI to continue to own its securities which were acquired while person was resident in India. So he can continue to hold this account there, the Demat account which was there, which he opened when he was a resident. And the securities in Demat account can be continued to be held by NRI. And but the very important point is the NRI needs to intimate to the depository about the change in his residential status. And similarly, the Schedule 3 and 4 of the non-debt instrument rules permits the NRI to make an portfolio on repatriation or non-repatriation basis. I'll explain you what is repatriation on repatriation basis in a while. Okay, then the investment in securities existing on date of becoming NRI will be characterized as a non-repatriable investment. And then for making any fresh investment on repatriation basis, new Demat account has to be opened. So here there are 3 or 4 important points. First is the individual, even after becoming a non-resident, can continue to hold on to his Demat account which was opened at the time of him being a resident. First point. And second, upon the change in the residential status, the resident is supposed to intimate to the depositor about the change in the residential status. Because once there is a change in a residential status from resident to non-resident, you cannot make fresh investment in the same Demat account. For in making fresh investment, further investments, you have to open a separate Demat account. That is one. And second, any investments which were made at the time of him being a resident will be treated as a non-repatriable investment. That means the sale proceeds of this, upon sale of these investments, or if there is any income by way of dividend or interest on debentures, etc., these proceeds cannot be taken outside India. That is what it means, non-repatriable. That means the money has to be kept in India itself, and the person responsible for making the payment, that is dividends or the companies in the case of Indian companies in the case of dividends, or the any other person who is purchasing the shares from them, the sale proceeds should only be credited to the non-resident's NRO account. In the previous slide, we saw that once the retention status changes, their bank accounts should also be converted into normal regular SB account, current account will be converted into an NRO account. So in such cases, similarly, what happens is when the investments is sold, or investments are sold, or the company is making a payment of dividends or interest, such proceeds has to be credited to the NRO account of the non-resident, because all the non-repatriable proceeds of non-repatriable investments should only be credited to the NRO account. The person responsible for making that payment should ensure that it is not paid into their NRE or for non-resident foreign currency account. It should only be paid to the NRO account. That is important. And second, when the fresh Demat account is opened, okay, it is allowed to make investments as a portfolio. Okay, and then he should, as I said, it is fresh account is opened with him being categorized as a non-resident. So in such cases, at the time of making the fresh investments, the individual can make the intentions clear whether he wants it to be a repatriable investments or a non-repatriable investments. The non-resident Indian has that option. So again, once he chooses it to be a non-repatriable investments, at the time of sale of those investments, the same conditions will apply, that the money cannot be taken outside India. It has to be credited only to their NRO account. In case of repatriable investments, the money can also be credited outside India or credited to their NRE account. So now we will let us understand what is meant by the portfolio in case of an individual. Okay, for foreign portfolio investors, the limit is different. For the individuals, they told the individual cannot invest in one company more than 5% of the paid up equity capital on a fully diluted basis, or it shall not exceed 5% of the paid up value of each series of debentures or preference shares or other share warrants issued by the Indian company. And this limit is for each individual, and all the non-resident individuals put together, it cannot exceed 10%. So this is what is called as portfolio investment. This is how it has been defined. So just to recap, the existing Demat account, which was opened at the time of him being resident, can be continued. Okay, it can be, it need not be closed, or the shares need not be transferred to any other account. It can, the individual can continue to hold that account, but immediately as the change in residential status has to be intimated to the depository. And second, he cannot make any fresh investments in that account itself. So for making fresh investments, he has to open separate Demat account with his resident status being clearly categorized as non-resident Indian, and the investments made in the original account will all be treated as a non-repatriable investment. So hence, any sale proceeds or any dividend proceeds which has been received will only get credited to their NRO account. The fresh investments can be either categorized as repatriable or non-repatriable based on the intentions of the non-resident Indian. So now coming to next topic of the PPF account. So in case of change in residential status, there are two conditions. One, the prior to 2018, the PPF account of resident was deemed to be closed. So once there is a change in resident status, the PPF account which was opened at the time of him being a resident was deemed to be closed. Whereas post February 2018, now the NRI can continue to operate that PPF account till the time of its maturity. However, he cannot renew or open a fresh PPF account. That is the change. And then impact on existing insurance policies. The life insurance, general insurance policies can be continued. They can continue to hold it. Okay, and then no special permission required for payment of premium. However, the individual is supposed to intimate to the insurance company and then update his KYCs accordingly. Okay, and once the existing policy matures, it is up to the insurance company to whether to accept the renewal or issue a fresh one. He can also reject the application. So this existing one can be continued. The fresh one is at the discretion of issuing the fresh one is at the discretion of the insurance company. And then now coming to the impact of investments made under LRS and ODI schemes. So when the individual has invested abroad under the LRS or the ODI scheme, what happens is those investments upon change in his residential status. So under the LRS scheme, the individual can continue to hold those investments, whatever has been made, under the even after becoming a non-resident. And whereas in case of the ODI transactions, upon him becoming a non-resident, it will not be treated as anymore as an overseas direct investment, because he is not a resident, he is a non-resident there. However, the change in resident status has to be intimated to RBI, and because in order to ensure that the UAN, unique identification, which has been given for the transaction is cancelled, because otherwise you are supposed to file all your annual compliances under ODI, like the annual performance report and the other fixtures as liabilities report, etc., has to be filed. So for that reason, once there is a change in the residential status, you need to intimate it to RBI so that the UAN is cancelled. And then, so impact on properties already held in India. So we have seen now the impact on the bank accounts, impact on the Demat accounts, and then impact on the PPF and insurance policies, and then impact on the investments already made under LRS and ODI schemes. Now on impact on properties already held in India. So as per the section 6(5) of FEMA, a person resident outside India may hold, own, transfer, invest in Indian currency, security, or any immovable property situated in India if such currency, security, or property was acquired, held, or owned by such person when he was resident in India or inherited from a person who was resident in India. And then the NRI can hold the already acquired agricultural property but cannot further invest or purchase such property after attaining the status of a non-resident. So, and then the resident, after becoming non-resident, cannot continue to be a partner in a partnership firm which is involved in agricultural plantation activity or a real estate business. And then investing in any activity of agricultural or plantation is restricted for an NRI. So here there is very simple. So any properties or any investments made by him when he was a resident, he can continue to hold. But once he becomes a non-resident, there are restrictions for him. One, he cannot become a partner, he cannot continue to be a partner in a partnership firm, so he has to retire from the partnership. And then the non-resident individual is not supposed to invest in any agricultural land or a real estate business. So whatever has already been inherited or purchased by him when he was a resident, he can continue to hold it. But no fresh investments is allowed to be made in agricultural properties as well as in real estate business. These are the two important restrictions. And same way, the agricultural properties, whatever he has inherited or he has purchased at the time of him being a resident, these cannot be sold to another non-resident. So the agricultural land has to be sold only to a resident. The FEMA restricts that as well. Okay, so one, he can continue to hold the property, and second, he is not allowed to be not allowed to invest in the agricultural lands or any plantation business or real estate business. And existing agricultural land as well, when it is selling, it has to be sold only to a resident. It cannot be sold to a non-resident. And all these are all will be treated as a non-repatriable, and whatever sale proceeds are there, it will go to the NRO account, and as per the limits in the NRO account, it can be transferred on an annual basis to other accounts abroad. And then the impact on the loan transactions. So the resident, if he would have availed loans at the time of being a resident, and now he becomes a non-resident, the relevant regulations for the same are provided under Schedule 3 for FEMA Deposit Regulations 2016. And as per that, the authorized dealer, the AD bank, at their discretion, may allow to continue the loan or the overdraft facilities. In such cases, wherever the AD bank allows him to continue it even after becoming a non-resident, in such case, the interest and repayment of loan may be made by inward remittance or out of legitimate sources in India or the person concerned. So you can pay it from your earnings outside India and transfer it to the concerned loan account here, or you can arrange for making the payment from a legitimate source here. So the continuing the loan is entirely at the discretion of the AD banker. And where the individual has granted loan to someone else, okay, at the time of him being a resident, now and becomes a non-resident. So in such case, the repayment by the resident borrower shall be made or credited to the NRO account only. So as I said, even the loan given by the individual at the time of him being a resident, and now if he becomes a non-resident, such assets, because the loan which has taken by him is an asset to him, so such asset or investment will also be treated as non-repatriable, and hence whatever the repayment he is receiving from the borrower can only be credited to his NRO account, not to any other account. So it is very simple. In the case of any non-repatriable investments, it is very simple. You can say that all the proceeds should go only to the NRO account. There is no ambiguity in this part. It's very clear. And other important point is, any change, any asset which was invested at the time of him being a resident, once he becomes a non-resident, is non-repatriable. These two are very clear. So whatever investments or assets that has been invested at the time of him being a resident will all be treated as a non-repatriable, and all the sale proceeds of the same should go only to their NRO account, not to any other account. And then now coming to the other general miscellaneous points. So as per the RBI norms for KYC, it is mandated to update the change of your status to NRI status and submit the new KYC. So as and when there is a change in registered status, you are supposed to submit it without fail. And such details to be submitted to the financial institutions, such as all the financial institutions, such as banks, mutual fund houses, and insurance companies. Wherever you have a transaction with any financial institution, you're supposed to update your KYC there. And then same way, it is required for ECS or auto debit facility, because change in your residential status will result in change of your savings account, and you will have to link it to your NR1. So at the time of once the residential status of you changes from resident to non-resident, you are supposed to ensure that the account in which the ECS is getting debited, okay, the ECS is again relinked to the new NRO account, because all the existing accounts will be either categorized as NRO or NRU account. So you need to ensure that upon changing your resident status, you also complete all the formalities for giving standing instruction for ECS to the new account, NRO accounts. So with this, the first segment of today's webinar is complete, where we have covered about the impact of changing resident status from resident to non-resident. And now coming to the impact of changing resident status from non-resident to resident. So again, here first we'll cover the impact on the bank accounts. So for an NRE, generally we have the NRE account, and then you have non-resident foreign currency account, you have the NRO account, and then the special non-resident rupee accounts. Okay. So what we'll see here is one. So what will be the impact on this? Okay. And then at what point of time it has to be converted or it has to be changed. So now first we'll start off with the NRE account. So the relevant provisions for all these accounts are contained in have been specified in the Schedule 1 of FEMA Deposit Regulations 2016. So now what happens once the resident status changes, the NRE account should be designated as a resident account. So you should change it to, and then the funds can be transferred to RFC account at the option of the assessee. So whatever foreign currency balance is there in the NRE account, it can be transferred to the resident foreign currency account, or you convert it to INR and move it to your other SB accounts or current one, any other account you want. Okay, and then here, this important point is such transfer shall be made immediately on change of the residence status. So you don't have time. So once the residence status changes, immediately we have to change the status of the accounts as well. Okay. And then when you come into the next level, there is foreign currency non-resident accounts. So in such cases, here the difference between the NRE and the FCNR will be that in the case of FCNR accounts, you will be whatever deposits has been made, the foreign currency non-resident accounts deposit, whatever is there, it shall be allowed to continue till the time of maturity at the contracted rate of interest, whatever rate of interest at which you have deposited. At that same rate, you will be allowed to continue till its maturity. So in case of NRE account, there is no such time limit. Immediately it has to be converted. Whereas FCNR, you are at the option of the individual, it can be continued till the time of maturity, or if he wants to convert it to INR or move it to the RFC account immediately, he can do it. Or else it will be allowed only till the time of its maturity. Okay, and then the bank should convert the FCNR deposits on maturity into resident rupee deposit accounts or RFC account. As it, there are two options for the non-resident. One, you can convert the foreign currency deposits into the INR value and then move it to INR deposits, or retain the foreign currency as the foreign currency itself and move it to the resident currency account. So both these options are available to the individual. And coming to the NRO account. So now in this case of an NRO account, the same way as the NRE account, it should also be designated as an resident account immediately upon change in the residential status. But where this account holder is only a temporary visit to India, the account should continue to be treated as a non-resident during such visit. So unless there is there is an intention of staying permanently in India, you can continue to hold it as NRO till the time you can hold it as an NRO account. Once there is intention to permanently stay in India, it has to be changed immediately to a resident account, either to SB or a current account. So this here, so in this case, as in the case of NRO as well, it is it has to be done immediately on the change in residential status. So only in the case of till the time. Only in the case of the FCNR account, you have time till maturity to hold that account. Okay. Now coming to the special non-resident rupee account, as per Schedule 4 of the FEMA Deposit Regulations 2016, the SNRR account may be designated as a resident rupee account on the account holder becoming a resident. So here, anyhow, this account itself is in INR. Resident, he can continue to service those loans subject to the terms and conditions specified by the AD bank. Okay, and same way. So in case of and then in case of loan granted by the non-resident OCA called to an in case of the non-resident, if you have already sanctioned a loan to a resident individual at the time of him being a non-resident, and then then he becomes a resident, and the repayment of the loan may be made to the designated account of the lender maintained in India. So once he becomes a resident, so whatever loan he has given when he was a non-resident, he can receive the installments for that in his resident account itself. There is no restrictions on that part. Okay. So one important point is in the case of the loans taken when he is a non-resident, he will be allowed to repay the loans from India, but the conditions will be stipulated by the AD banker in consultation with RBI. So you have to satisfy those conditions. So what happens to the properties already held outside India? So now in terms of the subsection 4 of section 6 of the FEMA, a person resident in India is free to hold, own, or transfer or invest in foreign currency or foreign security or any immovable property situated outside India. If such currency or security or property was acquired, held, or owned by such person when he was a resident outside India, or inherited from a person who was resident outside India. So either you have purchased it when you were a non-resident, or you have inherited from another non-resident, you can still continue to hold those properties outside India. There are no restrictions on that part. So the resident, even after becoming resident, you can continue to hold the properties. And then there's one other FAQ that has been mentioned in the RBI's website as well. On the foreign currency accounts held by the resident individuals, a person resident in India may maintain a foreign currency account outside India if he had opened it when he was a resident outside India or inherited from a resident outside India. So a resident Indian, if he has so when he was a non-resident, if he has opened any foreign currency account abroad, or if he has inherited any balance in any foreign currency account from another non-resident, he can continue to hold it even after him becoming a resident. That is what, there is no restrictions on this part mentioned in FEMA. So with this, we have covered the impact of the change in residential status on various aspects. So we have seen on the impact of change in residential status on the bank accounts, and then we have seen it on the investments being made, and then the impact on the loan transactions, and then the impact on the properties. We have covered these 4 aspects, both in the case of change in residential status from non-resident to resident, as well as resident to non-resident. If you have any doubts, please feel free to write to us. We'll be happy to reply for you. So we will meet in the next session with another topic on FEMA in the next week. Thank you.